Good afternoon, everybody, and welcome to Credit Chat. I'm Rod Griffin, Director of Consumer Education and Advocacy for Experian, here to answer your questions about credit reporting, credit scoring, fraud and ID theft, all of those things that we talk about every week and that concern your personal finance, your financial health. So if you have questions, please feel free to ask. I'll do my very best to answer. Sorry, I'm a little bit late. We actually had a great conversation about a project we're working on that should be exciting in the next month or so, I hope, to launch. So looking forward to that. Florida Cop 911, thanks for joining. God is my one. Thanks for joining and being part of the chat today. Again, if you have questions, feel free to ask. I'll do my very best to answer them. Hanging on to my voice a little bit too. It's a little bit hoarse and raspy this morning, so hoping I keep it working. Brad Cash now, thanks for joining and being part of the chat today. I'm always messing with the light too. For some reason, it doesn't want to. It seems very bright today, but we'll deal with that. Gingers for Life, thanks for joining. Ms. Precious 74, thanks for being here. Florida Cop, thanks. 911, thanks for getting the conversation started. Does Boost work in the background all the time or a one time? So it works in the background just like your credit report does. It does. I mean, it's once a month. Experian will go to your account that you're paying the utility through, your cell phone through, and capture that payment, just like a lender would report that payment each month. You don't have to do anything once you're signed up. It will just automatically capture that payment, put it in the report each month, and add to that account. So basically what happens is when you enroll in Boost, and if you're not familiar with Boost, for people joining Ms. ED4, thanks for joining. If you're not familiar with Boost, visit Experian.com/Boost. It's a free service that lets you give us permission to access your bank account, your checking account or savings account, to capture your on-time utility payments or cell phone payments or even cable television payments, what we call utility or telecom relationships, and put them in your report as accounts. So if you add your cell phone account, you would see that cell phone payment account added to your credit report, and each month we would update it with that payment information. Let you add the positive payment history to your report when in the past you didn't see that. Utility companies, cell phone companies didn't report your positive payments. This gives you the ability to do that with your permission, so you're in control of it. So you can tell us if you change your mind, you don't want to. We'll stop, and we're just capturing that payment, and that happens just like any other account each month. So it would do exactly that. It would just each month you're giving us permission to capture that payment. So it happens in the background. You don't have to do anything once you're enrolled. Rodney Maloney, thanks for joining and being here and being part of the chat. If you're just jumping in, please do ask any questions you have. I'll do my very best to answer. Occasionally I get stumped, but not too often. And we're talking about credit reports and credit scores and fraud and ID theft. I'm Rod Griffin. If you're just jumping in or it's your first time on the chat, I'm Director of Consumer Education and Advocacy for Experian. And I try to be here 1:30 Central, 2:30 Eastern on Tuesdays and Thursdays to answer your questions about credit reports and credit scores, which was primarily the topic, but also fraud and identity theft, credit questions that come up that we have expertise in. So please feel free to ask, join in the conversation. The whole idea is that we have a dialogue and a conversation to help answer your questions, because if you have questions, others do too, and we can help reach more and more people with information they need. That credit report should be a financial tool. It should not be a financial problem. It should be something you can use along with your credit scores to walk into a lender, know you'll get approved if you need to apply for a loan, know exactly what to expect, and know what they're going to see. It should not be a mystery, and we want to take that mystery away. Carlos Almero, thanks for joining me, part of the chat today. Again, please feel free to ask any questions you have, and I'll do my very best to answer. I have colleagues on as well, usually from Experian, and we'll probably see them pop up to remind me of things I should talk about. So always appreciate their help. Florida Cop 911, Credit Karma, Credit Sesame. They're both competitors to Experian, so I would say neither. I don't know if I can do that, but I just did. So I would say Experian. So you can use our app, the Experian app. You can subscribe to our monitoring services if you choose to do that, or if you've been a victim of a data breach, you may already be subscribed to Experian's monitoring services at no cost. But we provide a credit card matching service. We also provide education tools and resources, and it's free. And again, things like Experian Boost that aren't available through those other services. I would like to know, how many payments will it take to get better credit history? One sexy chick, thanks for joining, and great question. When you open an account, so starting from that perspective, you have a brand new account, hasn't been used yet, so a credit card, I'm going to assume. So you get a credit card, apply, you get approved. They typically don't report that account until the end of the first billing cycle. So that first month goes by, and when a payment's due, you make that payment and it gets reported to your credit report as an account. At that point, you have 1 month of activity. Most credit scoring systems need to see 3 months and sometimes 6 months of payment activity in order for an account to be included in the score calculation. So you're looking at two different things. How much credit history do you need? And when does it start? And it starts at the end of the first billing cycle, again, after 30 to 45 days, generally from the time you open an account. And then each month thereafter, you'll need to have activity. So make a small purchase, pay it in full if you can. That's the best thing you can do. And after 3 months, it will begin to be included in scores and begin to improve those scores. So that's and maybe 6 months depending on the scoring system that's used. That's kind of the rule of thumb. Some scores like Vantage Score can at times be able to have a score calculated after 1 month. So it can help after 1 month. So the key is having that consistent payment history month after month. That will always be helpful and is crucial. You never want to have a late payment. If you can pay the balance in full, that's going to help as well. The lower those balances are, the better. Whoops, turned my screen around, which is a good time to talk about, if you just saw that, join our credit chat on Wednesdays, 2 o'clock Central, 3 Eastern. I'll plug that right now. But we have great conversations tomorrow. We're talking about saving when you have a family. That should be a lot of fun and very informative. Great guests and great conversations as well. So join us for our credit chat on Twitter. 2 o'clock Central, 3 o'clock Eastern on Wednesdays. And you can learn more about those at Experian.com/creditchat. And you'll be able to see what we're going to talk about and things we're doing, as well as learn more about this Periscope. I'd like to know how many payments we'll take. So we talked about that. Brad Cash, now personal loans are not good these days because of too many fees. And I think that's something you have to consider. Anytime you're applying for credit of any kind, is it the right credit to apply for? Is it the right financial tool? Does it offer the right interest rates or fees for you? Does it offer other incentives? So personal loans might be right. We're seeing actually an increase in the number of personal loans that are being taken out. So it's a growing part of the credit sector. But is it the right tool to use? So you always have more than one tool in your toolbox. And the same thing's true for credit. There are all sorts of different types of credit agreements. There are revolving accounts, credit cards, there are charge accounts, there are installment loans, there are secured accounts, there are mortgage loans and auto loans. So different kinds of lending agreements depending on the type of credit you're applying for. And then you have to look at the lender you're working with. Is it a credit union? Is it a national bank? Is it a small regional bank? They all offer different kinds of services, different levels of personal service that needs to fit your particular needs. And so you need to explore those things and make sure it's the right for you. Maybe, personal loans might be right for that individual. I wouldn't say that any one of those is wrong. It just depends on your situation, your financial needs, and your kind of financial health and financial life at the moment. So lots of things to consider. Andrew 230497, thanks for joining. How many payments will it take to delete late payments? So one sexy check. Another great question. And the answer is it's when you make payments. It's a Monday on a Tuesday today. I had a great weekend, but I'm trying to get going again. The real issue is it isn't how many positive payments to delete negative information. They're both going to be there. Your credit history will show your payment history up to 7 years. And so when you look at that credit report, you'll see the late payments. The thing to know is that as you make positive on-time payments, the further in the past a late payment occurred, the less effect it will have on credit scores. So it's going to be less important. Your scores will improve. And eventually those late payments will fall off. Late payments are deleted 7 years from the date of the delinquency if there's only one, or you make a late payment but you catch up the next month and then there's another late payment. Because it was current between those late payments, they would each be deleted at the date they became delinquent. If you fall behind for 1 month and never catch up, so you're late consistently, so 1 month and then again and again and again, eventually that account would be charged off as a loss. in most cases, and those late payments would be deleted 7 years from the original delinquency date, along with the collection account. So the date you first became late and never caught up again, or never again current, is what we say. So that's how that works. Late payments are deleted 7 years from the original delinquency date of the debt, and along with any collection account. So it's going to take 7 years for the late payments to fall off. That doesn't mean they're going to have a huge negative effect, especially if you can catch up. If you miss a late payment, then catch up again, and are making payments on time after, the further in the past it occurred, the less effect it will have. And there are other things that can happen. If you've never been late on any payments in the past, great credit history otherwise, and life happens as it does, and you miss a payment, talk to your lender. They may be willing to say, hey, we know life happens, so we'll remove that, or we won't report it, and so it wouldn't affect your scores. If you've had a history of late payments, it probably won't be willing to do that. But always work with your lenders, because they might be willing to help out too and be able to. Can balance transfers hurt your credit score if you add too much debt to one card? Now, Rodney Maloney, great question. And the answer is yes, they could. And it's because if you make a balance transfer, there's several. Balance transfers get complicated sometimes. If you're transferring one balance to another, and so we're talking about, let me back up. I'm thinking of cash advance, which also gets complicated. But so balance transfer, if you get a new card and you use it to transfer the balance from one card to the new card, if you have, as a result, a high utilization rate on that new card, so the balance looks like it's a high percentage of the available credit limit for that card, that could affect your scores negatively. Conversely, if you're reducing the utilization rate on another card, it might offset, but you're going to see several different things. When you open a new account, what will happen is you have indicator. You have suddenly a high balance on that account, so the timing, it could be an issue. And then you have potentially a high balance on that card as compared to its limit, which is utilization, which is the second most important factor in credit scores. So that could be a factor. So initially you might see a dip. I always recommend that you wait a couple of months before you check your scores when you make changes like that, to let things stabilize, make sure that everything's consistent, and then check and you'll get a better sense of where the score is going to be over time. So that's kind of important. Don't look right away when you open a new account or make a change, because you'll almost certainly see the score go down a bit, but usually it comes back up over time. And as you use credit, it will fluctuate. But yes is the answer. It depends on how much you transfer. You probably heard the 30% rule. You never want your balances on your credit cards to be more than 30% of your available credit limit. Not because having the balance won't hurt your scores at all until then, because it will. The higher your balances are, the more it will affect scores. But when you hit that 30% mark, it's like a tipping point. When people exceed that 30%, there's suddenly a much greater likelihood that they'll default based on the research that's done and the history that the scoring companies have looked at. And so when you cross that threshold, the risk for defaulting goes up, and so your scores will drop more and drop more rapidly. So the lower you keep your balances, the better. And if you can pay them in full, that's even best. But yes, when you change that utilization rate, it's probably going to affect the scores, and especially if you have a new account. But then there are always more factors. There's never just one thing, and that's the challenge with scores. Always get your risk factors, see what they say with the score, because they'll tell you exactly what to look at. If they don't say your balances are too high on a credit card, that's not the problem. There's going to be other issues, and they'll tell you that. So look at those risk factors. That's the best thing I can tell you, because it will tell you exactly what you need to look at. Gingers for Life, thanks for joining. Florida Cop 911, download the app and says FICO score 8. Yes. So when you get the Experian app, we will give you a free FICO score 8, which is the most commonly used risk score, credit score by lenders today. FICO is a scoring company. There are lots of different FICO scores, kind of like General Motors is a car manufacturer. They make lots of different kinds of vehicles, trucks and cars in different variations. FICO does the same thing with credit scores. So they have credit scores, FICO 8 being their second newest. They now have FICO 9 available as well. It's beginning to be adopted, but FICO 8 is the score that's most commonly used, what we call model or scoring algorithm. And there are different variations on that as well. There's a FICO 8 score for auto lending. There are scores for mortgage lending. There's scores for insurance purposes. There are older FICO scores out there as well. So FICO 2 goes way back. We see that most often in mortgage lending. So different FICO scores for different kinds of lending. But the one that you get with the Experian app is the most commonly used FICO scores, FICO 8. When you apply or enroll in Boost, you will give you a FICO 8 score at the start. We'll give you a new FICO 8 score when you complete the enrollment process so you can see if there's any change. And we're seeing about 2/3 of people actually see an improvement. So that's the most common score. So that's what a FICO 8 score is. It's their most commonly used FICO model. Kind of like saying for Ford, the F-150 is the most commonly sold truck. There's lots of different versions of an F-150. You get two-wheel drive, four-wheel drive, long bed, short bed, 4 doors, 2 doors, all of that. So kind of same thing with scores in a very simple way to think about it. I used Experian Credit Card Match and got denied when you applied. Terrell Carey, not sure why. If you did get denied, you should get what's called an adverse action notice from the credit card company. That will tell you why you were declined. They have to provide that notice. Experian doesn't make that decision. So we're giving you the match information based on what you tell us you're looking for and need, and that would be the best match. But if the lender declines that application, they have to provide that adverse action notice. It will tell you why you were declined. If they used a score, what the score was that they used, the risk factors that go with that score, so you can tell exactly what the decision was based on, and understand exactly what you need to do to improve that credit history and the credit scores to qualify, if that was the primary factor. And may not be because of the credit report. It might be for some other reason. I got declined years ago when I went to buy a car because I hadn't been at my job long enough. So it had nothing to do with my credit history. But I had just gotten my first real job out of college, and I bought a Chrysler Sebring. And we can talk all about how you make car buying decisions and why not to do what I did, but I love that car. But it was too expensive. But when they declined my application, the first thing they said was, you haven't been at your job long enough. I'd only been there a couple of months. And so kind of in that, make sure you have a job and it's consistent. And I was young, so it had nothing to do with my credit history. My credit history was fine, oddly enough. Juicy Spirits, thanks for joining. Poltev, thanks for joining. And Live Now, thanks for joining as well. Please feel free to ask any questions you have. I'll do my best to answer. If you're just joining, I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. This is Credit Chat. I try to be here 1:30 Central, 2:30 Eastern on Tuesdays and Thursdays to have a dialogue, to answer your questions about credit reports and scores and fraud and ID theft, all the things that are so important to having a strong financial health and financial well-being. So that you can get the credit you need when you need it. Juicy Spirits, if a credit card company closes your account, what are the odds of them giving you a card in the future? And that's actually, one, it depends. That's all the answer to every credit question I think out there that you might ask. But in all seriousness, it's up to them. So it's a decision they'd have to make. And it would depend on your credit history and what you're doing to change. If they've declined or closed an account, they'll probably have that in their records. But if you improve your credit history, demonstrate that you regain control of your personal finances, that you've changed the way that you manage credit and are back in control, because and I say it all the time, life happens, and it happens to all of us, and we've all been there and done that. I think most of us at some point in our lives, and I certainly have. And you try to remember those things, and you'll get to a better place. And so it takes time, but credit card companies also have lots and lots of different product offerings. So even though you may not qualify or may have had an account closed for one account, in the future, you may qualify for a different offering from them, and they may take you on. So, that's the odds are probably pretty good you could get approved in the future. How far in the future is the question. How much work do you need to do to get back to where you can qualify? Como Laco 1781. Hi, thanks for joining. If you're just jumping in, I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian, and this is Credit Chat. We talk about credit reports and credit scores and fraud and ID theft. And Stormtroop 88, credit is poison. I disagree. Debt is a financial problem. credit can be a financial tool. Businesses use credit all the time as a financial advantage. I think people should too, but you have to distinguish between the two. If you use credit and take on debt that you can't manage, debt's the problem. If you use credit as a financial tool and use it to invest in things that are going to be beneficial and don't just buy stuff, which is what usually gets people in trouble, it can be a financial tool. You can use a credit card, for example, and not carry debt. People don't think about this, but if you make purchases, pay the balance in full each month, but you get cash back or you get incentives like airline miles or discounts on purchases, you can use that credit to your advantage. It's exactly what businesses do. They will use credit to invest in capital, in equipment purchases, and those sorts of things because they can invest their cash in stocks or in other investments that draw greater returns than the interest rate they're paying for borrowing to make those purchases for their capital investment. And so if they're paying 5% interest on a loan, but they're making 8% interest on their investments, the company's making money. And that's the way I think we should think about credit. It's not the credit that's the problem, it's debt that's the problem. And if we don't manage our debt and don't invest in credit well, it can be a problem. And dangerous, I'll agree. That is possible. If you're not thinking about how to use credit, you use it in ways that you're tempted to use it and borrow. It's not for everybody. And people sometimes don't like that answer, but having credit isn't for everybody. But if you're able to manage it well, it's a great financial tool. And you can learn to do that. So that's where I think we have that conversation. It's important to build capital. It's important to build savings. You have to have good savings habits to have good credit, because if that life happening thing again, if life happens, having savings will help you manage those credit payments if you have them, continue to pay the debts you have. The other thing I would say is, if you think about credit, if you're going to buy a house, most of us will never be able to save enough to pay cash for a house. Credit and having a good credit history can help you buy a house and make possible things in life that otherwise wouldn't be. That doesn't mean you use credit as additional income, but you use it as an investment tool and to be able to qualify for those sorts of things that you otherwise couldn't save cash for. So when you look at the average household income in the U.S. is $60,000 a year. Most people, about a little over 62, something like that, 63. But most people couldn't save enough to buy $100,000 or $200,000 or $500,000 home. But if you use credit well, you can make that home purchase. That's what credit should be used for, is as a financial tool and a tool to invest to improve your financial life. Debt is that financial problem. You never want to take on more debt. How can I get a business loan to start a business? I have excellent credit. So Brad Cash now. Great question. Speaking of businesses, when you are launching a small business in particular, sometimes it's necessary to secure that initial business loan with personal credit. Once that business is established, you'll be able to establish a business credit history. So you register your business as a legal entity, an LLC, a limited liability corporation, for example, and you need to buy equipment or tools, whatever it might be, to run that business. You apply for a business loan using the business credit history or the business accounts, and qualify maybe for a small loan, a small business loan that's reported to your business credit report. That business credit report is kind of like a personal report, but for the business. It shows, the name of the business, the officers in the business, the legal structure, any debts that the business is repaying, any public records around the business. Was there a bankruptcy? Are there, civil judgments, things of that sort? Most of the time, there aren't. But it can also be used as a marketing tool, which people don't think of. You have a great business with great credit. You pay your vendors on time. So you have to kind of get the business started. Once it's started, you want to separate your personal credit from that business as quickly as you can and establish that history. But it's about getting a business loan to that business once it's established and legally structured. And then we can create a business credit report that's separate completely from your personal report and start that process. But you have to talk to a lender, a business lender, about getting a business loan. Minister Dave, thanks for joining. Usury, great term. And that's really about abusive interest rates and fees, particularly interest rates against consumers. And so there are usury laws that limit the interest rates people can charge, the way they have to do it, and businesses can charge, lenders can charge, and it's typically state regulated, some federal regulation as well, but they limit how much you can charge APR, for example, on a loan. And if you're exceeding those, and there are other technicalities, I'm not an expert on usury, but they're set as rates, and they limit those so you're not being abused, essentially. Is it common, Juicy Spirits, is it common for a person's credit score to drop drastically during their lifetime and recover? Yeah, I mean, it can. So it's again my personal experience, right? So when your scores go up, the higher your scores are, the more they can fluctuate, and they'll go up and down. And, in some cases, it's more significant. I mean, because things happen. So if you go through a divorce, for example, that's incredibly costly, and it creates lots of problems, usually affecting women more than men, which is sad, unfortunate, and not fair. But when you have to take on a mortgage, or you have to, as a result, declare bankruptcy because of the cost, those sorts of things, that will have certainly a bigger effect. If you are just going through life, and things happen, you need to make charges. The more debt you carry, and sometimes you carry more debt, the scores will go up and down. As I say, and the higher your scores, the more they can fluctuate. So, as an example, my scores have dropped 40 points over the last 3 months, so November to January. Not because I've done anything wrong. I just had when I visited family over the holidays, and when I do that, I use a credit card that I don't use very often, to make sure that, not because I'm spending more than I should be, but to make sure that when I'm spending and I'm not in places I usually am, it's safer. I'm protected from fraud. I'm able to manage my expenses. I don't have to carry a lot of cash or any. And so the balances on that card went up. As a result, my scores dipped. And they've changed. So as my credit usage has changed and been outside the norm over the last few months, my scores have gone down. They're still very good. I'm not worried about that. They'll go back up. So what I've charged on the card's paid off. That utilization rate's back down after the holidays. It's all gonna go back up. The scores will recover. And so that happens. Yes, I mean, your scores can fluctuate tremendously. And as you get older and get more experience, your scores will tend to increase more. They can rebound faster. But so yes, yes is the short answer. To where it was before, rise higher than before, and it can, and recover, absolutely. So if you open new accounts, you make a major purchase, your scores are going to change. If you buy a car and you use credit, it's a major purchase, your scores could dip significantly. If you buy a house, the largest purchase most of us make, your scores will probably dip quite a bit initially, because you have this huge new debt. They want to make sure you're going to pay it on time. But then as you pay that mortgage on time, your scores are going to recover. They're going to go higher. As you get older and show positive experience, and it's gray hair affects credit scores as well. So yes, I mean, and so don't panic when you see your scores going up and down. Instead, look at the trend. So scores can go like this. Usually don't see this big drop. It's just, you'll see bigger ones and smaller ones, and they'll trend upward. That's what you want to see over time. There's usually no quick way to build credit, have great scores, and you usually won't see scores just zoom up. Yeah, they will go up and down. Benjamix, thanks for joining. Minister Dave, thanks for joining. If you're just jumping on, I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. This is Credit Chat. Try to be here 1:30 Central, 2:30 Eastern on Tuesdays and Thursdays to answer your questions about credit reporting and credit scoring and fraud ID theft and all of the things we talk about. Is credit good or bad? Is it? And I think it's a good thing for most. If you use it well, it can be a bad thing if you misuse it. And I think that's true of a lot of things in life. Debt, it's a financial problem. You want to keep that to a minimum and get rid of it if you can. I differentiate between the two. Credit I use it as a tool. Debt's a thing I try to avoid. Sometimes it's unavoidable and part of life, and sometimes it's a good thing to invest in. Buying a house is kind of the common example, or education, for another good example. I think student loans, if you get that college degree, tend to pay for themselves over time, over the course of a career. So think about it in those terms, and it's a little bit different. But Thank you all for being here. Rich 33181, thanks for being here. And thanks for all of the great questions. Tomorrow we'll be on Twitter, 2 o'clock Central, 3 Eastern on Credit Chat. Going to talk about savings when you're raising a family. That's always easy, right? And how to manage your finances. That should be a really fun conversation, interesting conversation. We'll have some great guests with us too. But thank you for all of the great questions. And I hope to see you tomorrow on Twitter. You can learn more about this Periscope and about our Credit Chat at Experian.com/Credit Chat. Thanks for being here. Tell your friends and colleagues to join us. We always love to have you join and have the conversation. The more we talk, the more we learn. So, and the more we share, and the more I can take back and learn from, and our business learns from as well. Because I do share your concerns. I share the things that you're learning about. We use it to help provide better education. We use it to inform the kinds of products and services we're developing to serve you as consumers better and more effectively. Experian Boost is an example. People were telling us, hey, and said on the Periscope, I pay my cell phone bill on time all the time. I pay my utilities on the time, all the time. Why doesn't that help me? And so we found a way to let you give us permission to add that information and give you control of that, which I think is really exciting. So thanks for sharing, and thanks for being part of the chat. Thanks for all the great questions, and hope to see you all again soon. Join us tomorrow, 2 o'clock Central, 3 Eastern on Credit Chat on Twitter, and I'll be here Thursday unless something happens that I don't know about between now and then, and here to answer your questions. Hope to see you all again very soon. Have a great day, and take care, everybody.